You're listening to the Option Alpha podcast from optionalpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at optionalpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again at optionalpha.com, working every single week to make this the most popular investing podcast offered in iTunes and online because it's based on one thing and one thing only, and that's helping you make smarter trades. So thanks so much for tuning in today, and we've got another great episode. This is actually part 2 of options trading taxes with our CPA here, Brandon Hall, which we have on the line. And again, if you missed part 1, I highly encourage you to go back and listen to that show first. Then you can come back here. We're going to be doing a 3-part series with Brandon, taking all of your questions that you've sent in about taxes and trading and everything and kind of breaking them down into these 3 segments. So part number 1 was show 38. So you can just go to optionalpha.com/show 38 and then get all the show notes for that page on the show notes page and all the questions that Brandon asked there. And there's a lot of comments that people actually asked inside of that show notes. And then Brandon was also really good about going back in and kind of adding responses and details to it. So if you've got additional questions, definitely reach out to us on the show notes page. This show will be show 46. So optionalpha.com/show 46, or you can reach out to Brandon directly at hallcpa.com. Is that right, Brandon? That's right. Yeah. hallcpa.com. And we'll have that all linked up in the show notes as well. So without further ado, Brandon, welcome back to the show, man.
Hey, Kirk. Thanks for having me. Good to be here a second time.
Right, good. And I'm glad we got this done now. We're now past tax season. We tried to kind of work it in before, but you were kind of slammed with stuff, and so were we. So let's get right into it and start asking and answering some more questions. So question number 1 that we had from people sending in is, and it was kind of a similar question that people asked across the board, but what do you think every options trader or stock trader or any trader really should know when it comes to protecting their earnings from taxes? So are there things that everybody should be doing that they're not, or like what are the top things that everybody should know when it comes to protecting earnings?
Yeah. So by trader, I'm assuming that we're making active trades. Really, the standard advice is going to be watch out for the wash sales, right? I mean, anytime that you are doing any sort of active trading, you might Google around and wash sales become a big, huge deal that you have to learn about. It can be extremely confusing. So that's like the standard advice. Watch out for the wash sales. Don't get hit by the wash sales. But I'm going to take it a little bit further, and I'm going to say, if you're trading inside of an IRA or a retirement account, and you're also trading in your personal name, then you have to be really careful about the wash sale rules. And basically the reason for this is that if you're trading in your personal name and you initiated a position in security or an option, you sell it and then you buy it back, but you buy it back in your IRA, that actually triggers the wash sale rules because the IRA is considered a related party to you. It's basically an extension of your arm. And what happens is you've moved your cost basis from your personal portfolio into the IRA. The IRA is already tax deductible, so we don't really want to do something like this because at the end of the day, if the IRA were to liquidate, were to close out that position, they don't get a tax write-off for the loss that's being transferred into that IRA. So I guess the top thing that I would say for investors, traders that are actively trading and trading in a retirement account is to just be very careful about buying back securities that you've sold in your personal name.
The wash sale, inside of the first part segment that we did with you. And again, that's show 38. But what you're saying is like, just again, be cognizant of how you buy them back and when you buy them back. And then one of the things that we do here as traders a lot on Option Alpha is we'll sell an option, then buy back later for a profit. So we'll buy back later at a lower premium. So is that not what we should be doing? Is that what you're saying? Like, is that like, can you help bring some context around like what you said with, don't buy it back later?
Yeah, absolutely. So when you're saying that you're buying these options, selling them, and then buying them back later, what's the time period between selling them and then buying them back?
Real key point is that what we do is we will sell an option or sell a spread, like any type of, classified spread that, FINRA and everything, acknowledges, and we'll buy back that spread or that option. And sometimes it may be the next day where we actually buy back, but sometimes it may be 30, 40 days out, that we actually buy back. I think our average holding time right now on our performance page is about 26 days.
Okay. Yeah. So if you're trading the same security and you are trading these securities within a 30-day window of each other, then yeah, that's going to trigger the wash sale rule. So if you're recognizing any losses on these trades, the losses are actually just going to accumulate in those future buys, essentially. So you're never actually going to be able to realize the losses until you stop trading for a period of 30 days.
Good to understand. And I think the clarification here is because I don't want to I don't want people to say like, oh, well, we can't be doing this. It's just that if you happen to be doing this and let's say you're trading SPY, which is a major market ETF, and you're trading it and you're going in and out in a 30-day period, and you keep doing that without having a 30-day time lapse, then you can't roll over any losses or count any losses on your taxes. But as soon as that 30-day period expires and you don't trade SPY for 30 days, then you're good to go, right?
Right, exactly. And let's say that you might have like a watch list or so of 5 to 10 securities that you like trading the options of. If Apple issues securities, Apple securities are different from Google securities. So I can sell Apple and go and buy Google the next day, and that's not going to trigger the wash sale rules. It's only when the underlying asset is the same.
And that's totally good, because what we always talk about here, and like we're actually seeing right now where there's just low market volatility. This is May 10th when we're actually recording this with me and you. And right now, one of the areas that has high volatility that we're really active in trading is silver and gold. But that's not going to be that way for the rest of the year. So we may be really active trading silver and gold right now, but I doubt we're going to be active in the same 30-day window all year. So eventually, if we did have any losing trades, which actually thankfully we don't in gold and silver right now, then we would be able to roll those over. And I think, what I also want to just like really stress with people on this is that with this wash sale rule, it's not that the wash sale rule means that you can't count losses. It just means that you might have to defer them to the next year or period, depending on when you have them, right?
Right. Yeah, exactly. And I mean, too, there are things that we can do. So I guess the key here, if you are actively trading, is don't wait until January to run all of this by your CPA. Like, this needs to be done in November so that the CPA can say, okay, this is the strategy going into December. This is what we're going to do. For instance, I had a couple of guys that I helped this past year. We developed a strategy and basically said, you have to close out of these positions in December and just don't buy back into the same positions until February of next year. So even though it's technically in wash sale territory, we still get to count the losses in 2015 because they're not trading again until February, which is outside of that 30-day window. So it's just like little things like that if you wait until it's too late, you can't adjust, you can't benefit.
Awesome. Well, that's good. And definitely, like I said, if everyone's listening, you want to learn more about the wash sale rule because it is complicated, and we get into it a little bit deeper in show 38, which was part 1 here with Brandon. All right. So question number 2 that a lot of people had are we taxed on the gains only when we withdraw funds or every year, regardless of any withdrawals in our account?
Yeah. So that's a good question. And I guess it kind of depends also on who we're talking about as a trader. So many of I don't want to make that assumption. Who's your client base? Is your client base generally like the non-professional traders? So they have like a day job and they're doing this on the side?
Most people are doing this on the side. Most people are doing this having either full or part-time jobs. So, they're trading. I think our average account size last time we did a survey of our members was like $110,000 which is actually really high for an average account size for our members. Mm-hmm. But that's about the average size. Okay,
great. Yeah. So then in that case, most of your listeners will be subject to taxation whenever they close their positions. So you can do the craziest option scheme that you want to do, but you're not actually going to be taxed on the proceeds until you close out of those positions. On the other hand, if you're using mark-to-market accounting, which is more of the professional trader, that's going to be where you are taxed at the end of the year based on the current value of your holdings. So you don't actually have to close out of those positions to be taxed on the gain or to benefit from the loss.
99.9% of people are going to be taxed when the gains actually happen or the losses actually happen. And it's going to happen immediately. It'll accumulate in your account, whatever that, basis is for the end of the year.
Right.
Okay. All right. So question number 3 is there any way to deduct trading commissions as an expense item? Because we know that that's a big thing. Like some of these brokers out there are charging, and we pay a really low rate. I think our rate's 125 per contract or 120 per contract right now. But a lot of brokers out there in the options trading space are charging, $4 or $5 a contract. And so commissions really add up. So can we deduct trading commissions?
Yeah, $4 to $5 a contract. That's expensive. Yeah,
actually, there's probably a lot out there that are charging, probably even higher than that when like you factor in like ticket fees and all that.
Oh man, that can really add up. Yeah, and this is also a great question. So what I would encourage you to do is to pull up a previous statement, or whenever you buy into, or whenever you initiate your next trade, take a look at the cost basis of that trade, and you're going to see, I would assume, unless your broker's doing something weird, you're going to see the commissions built into those open positions. So the commissions they're not like a currently deductible expense, if that makes sense. You get to benefit from the commission expense whenever you close out, because it raises the cost basis of your position. So if you initiated a position for $10 and the commission was $1, your cost basis in the position is going to be $11. So if you sell it for $12, you're only looking at a $1 gain, not a $2 gain.
It's actually, it's a good thing. So like the end result is you can't deduct it as a line item, right? Like you can't write off and say, oh, well, I had, $2,000 of commissions, but it is factored into your cost basis. So like you said, if you bought something for $10, you paid $1 commission, then you sold it for $15, your cost basis is still $11. So you might think that you made $5, but after your commission cost, you only made $4. So it's going to factor in the fact that you did have to pay commission to get in there.
Right, exactly. You don't lose out. It's always there, and it's the same way even if you're just trading stocks. It's not just options. I would just encourage your listeners to take a look at your statement next time that you initiate a position, and you should see the commissions added in there. If you don't, give me a call.
Yeah, I think most of them do. So, okay. So next question is it true that brokers do not report option trades on their 1099Bs?
Yeah, so this was actually an interesting one. I was doing a little bit of research on this because I wasn't 100% sure, but what I found was that there were regulations that were initiated in 2014 that basically said, yes, brokers need to be reporting option proceeds, option losses on your 1099Bs. So if that's not happening, I believe Bank of America, last time I checked, Bank of America was one of them that doesn't actually do this. And I'm not sure how they get around it because they're supposed to, especially with equity options.
Don't have a lot of customers, I think.
Yeah, well, that's probably, I'm sure they apply
at least
for
on the options trading side, I doubt pretty much anybody trades with them.
Yeah, well, that's true too. But yeah, they should be reporting the proceeds. I believe the only options that you don't have to report the proceeds on are compensatory options like ISOs and ESOs.
But I think the thing is that most of them are reporting now, so it should be in your 1099Bs. And again, if they aren't, you just call Brandon and he'll, track them down.
Yeah. There you go.
Okay. So another question that somebody had, but I don't know if we want to, necessarily cover this again in detail because we talked about it before, was on the wash sales. So we're going to skip that. The other question that somebody had, and really this is our last kind of major question for this, segment or part that we're doing here, is what do most options traders, or I guess investors in general, like where do they leave money on the table, or where do they expose themselves to unnecessary tax obligations? And we talked about like the wash sale thing already. So are there other things that people do where like they're not doing, or maybe they should be doing something different and just kind of like leave themselves open to a bigger tax bill?
I don't really think so. I mean, if you're a professional trader, there's a lot more that you have to deal with. But like just for the part-time guys, there's not a whole lot out there. I mean, the wash sale is the big one that you need to watch out for. Some other things that you can deduct as like business expenses or investment expenses would be like cost of newsletters or financial subscriptions, legal and advisory fees related to your investments, and then also interest expense. I actually see a lot of people who are trading on margin will not deduct or forget that they can deduct the interest expense related to the margin. So that's something, I guess that's kind of where they leave money on the table.
I think all the little things add up, like that's really what it is. And So let me ask you this question, and this wasn't on our list here tonight, but I know that people often ask, like, if they're working a full-time job and then also trading on the side, are they able to deduct anything like home office expense, internet expense, like platform fees? Like some brokers charge platform fees. Like, can you deduct anything in that field as related to your kind of part-time, job here trading options?
So you can really only do that if you are able to qualify as a trader, which I think we touched on last time what that means. But basically, if you work a full-time job and you generate a substantial amount of your income from that full-time job, then you're not really going to qualify as a trader. I think actually I was refreshing my notes on trading or what qualifies as a trader, and I found today that there's only one court case where a professional with a full-time job was audited and convinced the IRS and the tax court that they qualified as a trader. So
wow,
the odds are stacked against you.
So the reality is that you really can't do it unless you're doing it full-time.
Right. Yeah. I mean, the IRS kind of reserves the trader status for a professional trader. And those are the guys that can deduct those business expenses on Schedule C, like the home office and the other things that you mentioned.
Well, Brandon, man, thank you so much. I know this has been definitely a jam-packed session. We'll be doing another part for everyone out there that's listening. So definitely subscribe and, follow along. We'll try to get Brandon on back here in the next couple shows. And definitely, if you have more questions that you didn't hear us cover today in the episode, please head on over to the show notes page, optionalpha.com/show46. That'll be where all the questions and answers are posted from today's show. And again, Brandon will try to jump in there now and then as his schedule permits to answer questions that you guys might have. So Brandon, again, thank you so much for jumping on the call with us here today and helping answer questions about taxes.
Yeah, thank you, Kirk. I love this. This is great.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.
All right, so I truly hope you guys enjoyed today's show with Brandon and at least got one thing out of it that you can apply right now to make you a smarter, more profitable trader and investor. I know that taxes can be sometimes confusing, a little scary or frightening, but the reality is that we have to deal with them. And these are tough topics to cover. And hopefully we're doing a good job here in breaking down some of these questions that you guys have been submitting. And again, we still have one more part in our 3-part segment here with Brandon. So if you didn't get your question answered, or if you have a new question that you'd like to hear answered on the show, please head on over to the show notes page for part 2 here, which is optionalpha.com/show46. That's just the number 46, optionalpha.com/show46. Make sure that you post your question to the show notes page there, and we'll make sure that we get that question added into the queue for our next segment with Brandon. Until next time, happy trading.